Hello and welcome to yet another session of our virtual international trade law class. Today, similar to our previous session, we'll focus on an international institution that is not directly part of international trade law, but due to its activities is deeply connected to it, namely the World Bank Group. You could say the sister of the IMF. Both of them are located in Washington. They're facing each other, plus if you're a member to the IMF, you also have to be a member of the World Bank and vice versa. What is the World Bank? It's not a bank in the sense of where you go to open a bank account. It's strictly speaking a group of different international institutions, namely the International Bank for Reconstruction and Development. This is the one people usually associate with the term World Bank. This is the one institution that was established after the Second World War or in the final phase of the Second World War to reconstruct Europe after it had been ravaged, demolished by the Second World War. However, its scope of activities gradually expanded throughout the globe for one reason, because it was visible and obvious to everyone that it was not only Europe that needed financing of infrastructure projects, but other regions as well. Many countries had become independent from the 1960s onward and were in dire need of support, of financial support, or logistical support, capacity building, institution building, you name it. Plus, the so-called Marshall Fund also took over significant parts of European reconstruction, allowing the World Bank to direct its focus to other regions or other countries. This, however, if you speak of the World Bank, usually people would associate it with one of its key pillars, namely the International Bank for Reconstruction and Development. Development, commonly abbreviated as IBRD. However, there are other parts of the World Bank Group as well, which I shall briefly mention at this point. The International Finance Corporation, IFC, which was established some 12 years after the Bretton Woods Conference in 1944, to provide loans and investments to the private sector. Then you have the International Development Association, established in 1960 to provide interest-free credits and grants to its poorest members. Then another one is the International Center for Settlement of Investment Disputes, commonly abbreviated as ICSID. This was established in 1966 as a forum for investment disputes. ICSID itself is not an investment tribunal or investment court. It provides the facilities. It lends support to members which themselves want or are engaged in an international investment dispute with a private investor. That's the usual relationship. How do you get there? On the basis of a so-called BIT or BIT, a bilateral investment treaty, where two countries guarantee protection to the investors of the respective other countries. And if the investor feels that there has been a mistreatment, that there were certain standards were not being met, that its security was not ensured or guaranteed, or that some of its expectations were not being fulfilled, although the government had, for example, made a promise. In such cases, it can go to an investment tribunal and use, for example, ICSID, which is part of the World Bank Group, to establish such an investment tribunal, and also in part of the organization to select arbitrators who will decide the case, and so on and so forth. It's a forum or it's an institution for institutionals. It gives support if you want to start and go forward with an investment dispute. And last but not least, which will also be mentioned here, is the youngest part of the World Bank Group, namely MIGA, the Multilateral Investment Guarantee Agency, which was established in 1988 to provide guarantees against non-commercial risks to foreign investors. Why? Because you, as a poorer country, you want foreign capital, foreign money to come to your country. However, why are investors quite often reluctant to invest in poorer countries? Simple reason being they're afraid that there could be political destabilization, tensions, riots, or even an outright war. In case investors are afraid that, for example, there could be an attack or a riot in front or inside of their premises, they can conclude such an investment guarantee or ask for such a guarantee by MIGA, and in exchange, however, they would be willing to invest in a poorer country. In case you're interested into what the World Bank is actually doing, I've included a list with some examples from a recent World Bank report, which mentions mobilizing domestic resources to create markets, improving business models or the business model, leading on global issues such as climate change action or pandemic emergency financing. That was in the wake of the Ebola crisis. However, the World Bank is also involved in battling the coronavirus pandemic, granting $1 billion for women entrepreneurs or expanding international development assistance financing tools. And all of that is part of what you could say the overall goal of implementing innovation. But that's just one example given by the World Bank, or a number of examples given by the World Bank itself. In case you want to know where the money is going to which regions, most of its money, almost $20 billion, go to sub-Saharan Africa, followed by $14.1 billion, which are being handed to South Asia or South Asian countries, followed by Europe and Central Asia with $8.8 billion, $8.2 billion then for Middle East and North Africa, and last but not least, East Asia and Pacific region with $6.8 billion. Long story short, the main difference between the IMF and the World Bank is, as you could see, IMF involved in monetary policies plus giving out loans to countries in dire need for money if they have to repay their debts or face balance of payments problems, whereas the World Bank is financing concrete projects. So that could be an infrastructure project where the World Bank would say, okay, let's look what is the impact of a specific project on the economic growth of a country and then balance it against environmental considerations. So an environmental impact assessment would have to be undertaken in this regard. Is there a human rights impact if, for example, traditional societies are forced to move because there is a huge infrastructure project in their traditional, where they usually live or where they used to live for centuries? Is it worth the human cost? And so on and so forth. This is the main difference. However, both of them are involved in promoting economic well-being, but at the same time, it shall not be forgotten that both of them also have faced severe criticism for being too harsh in their requirements when giving out money, and also that many of their solutions ignored the needs of the affected population. But at the same time, however, keep in mind these are two of the cornerstones and remain two of the cornerstones of international economic law with their respective competences and responsibilities. However, there's been an increase of parallel institutions, so it doesn't mean that they have exclusive competences in this regard. Also, there are regional tools, for example, the European Union or China. Also, this is a means of strengthening the relationship between China and its neighbors, or the European Union and its neighbors, by giving money to concrete projects or to these countries outside of the structure of the IMF or the World Bank. These are the global ones, dominated still by Western countries, also explaining why the IMF chief is always a European and the World Bank chief is always an US American. But for the time being, these are the most influential global organizations. But time will tell whether the current political dynamics and the rise of China will lead to an increased focus on alternatives to these two organizations. Having said that, that includes our very short session on the World Bank, and I'm looking forward to seeing you in the next session or presenting to you international trade law proper in the next session, where we'll focus finally on the most favored nation clause, Article 1 of the GATT. Have a good evening.